Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Monday afternoon, and this is the 6th of March, 2017. Well, as you can see, the grain market's a real mixed bag. You got the beans down a quarter, you got the corn down 2 1/4, but the wheat up and the cotton market up. In the soft sector, you had the sugar market all over the board, but sugar and the cocoa both gave back ground, and you'll see that in a minute. No real news hit the marketplace concerning the grain markets today. When we look at a May soybean weekly chart, you can see last week's action. In the market so far, it's only Monday, trading within a narrow range, 10 cents, if you will, of that whole big action week, and just sort of sitting here, drifting around. When you go on a close-only basis, you'd gone from 10.22 back over the 10.50s, and now you're about 15 cents off that break, but I still call this a down thrust in action. Now, as we take a look at a daily bar chart on the market, you've got a high, another level of a high, but you can also see an area here of higher lows. And you see that when you put the swing line on with the lower highs, but you can argue these apexes are higher. So the market's got to resolve itself, and one of the ways it could do that, either take out 10.56 1/4 for a move to the upside, or 10.28 3/4, a move to the downside. Right here, it's just in no man's land, and it's stuck between the 18-day moving average of closes and the 100-day. And when you get that, you churn a little bit in the market as it has to decide what to do next. In Bollinger Bands, you've got the market. Excuse me, I have allergies at this time of the year. They're starting already. As you look at this, they're fairly far away. Not an awful lot going on one way or the other there. And in momentum, you have corrected, so it's past tense and oversold condition. Much of a break would get it oversold, though, again like that, because your readings are in the mid-30s. In the meal market, you do have a downtrend. Lower highs, lower lows. You have 2 days in a row where the market has spent time in the slow stochastics under 20. You need a third day. The third makes the market embed. Without that, you're just at an extreme oversold in the market, which would require an up move to get it going anywhere. And please keep in the back of your mind that your Bollinger Bands have been pretty much in a slight down mode, but nothing big. And if you get to the lower band, right under it is the 100-day average for support. In the soybean oil, if you want to get the market bearish again, what you've got to take out is 33.84 and get underneath the 18-day average of closes. On the other hand, if you take out 34.81, you'd have higher lows and then higher highs, looking for a challenge of 35.47 to 54. So this particular pattern isn't doing the market a lot of good. And what bothers me on the buy side of the market is look at how overbought you are. You have readings 73, so that becomes a problem there. This is one of these days. Coming to work today was not an easy task. There just was nothing to do. If we look at the pattern on corn, you got a higher high and a lower low. No trend. The market is sitting right here, as you can see, literally on the 18-day average of closes, what I call that line in the sand. And how many days have you hit it now? Whenever this happens, the market's trying to figure out direction. Also, momentum, sort of flat here in the 51-58 level. In the wheat market, you have the pattern of higher lows, higher highs, support around 454 3/4. You wouldn't want to see prices under 448 if the market's going to hold up. Let's assume it takes out 448. Because you got the higher high today, you could not get a sell signal. You could get, obviously, a get out of longs, but not a sell signal. In the sugar market, a big outside day down. So the market opened up, took out last week's, really its highs even. Down again. 18.95 might be the next support, and you are in a very oversold condition at this time. In the coffee market, the pattern is lower highs, lower lows, still working its way basically down. Resistance proving itself at the 18-day average, will support at 140.30, prove its support. But it is an oversold condition. In the cocoa market, all you did is get back to the 18-day average and back off a little bit here. Now, in order for this trend to keep going, it's really got to come down and take out this 1869. You don't want to see the market come down and then gradually come up again. That could be the first sign that the market would be bottoming here. Not saying it is. The trend is still down. Cotton market, you got up here, backed off. As you can see, it's the first close over the upper Bollinger Band, but it's very overbought. Market just got away from the bulls, and it's still looking strong. Cattle. As you can see, 155.12 is the 18-day average of closes. The pattern is one of a higher high, and today's low at 115.22.5 just took out the previous swing line low. So now I could actually take this arrow, and if I want, pointed here, pointing down. You're void of trend at this point, stuck against, again, that 18-day average of closes. Feeder cattle's in the bear camp, however. Lower highs, lower lows. Sales zone, I think the pros were looking at 123.57.5. As long as you don't get over 125.27, the market's still bearish. If it breaks from here, 121.27 could be the support zone. Hog market. The hog market's got a pattern of higher high, lower low, oversold. Nothing to do that I see there. But there's always something to do with Modern Trader, and this is the April issue that is now out. And on the April issue, you not only get Market Focus, which is their daily publication of stories, tell you what's going on, but you get the regular magazine. Now, the magazine is now sent out by email via the free subscription they let us give you. And that's how I read mine. It's how you should read yours. You can always print it if you want it. Stories, trading the average true trend, platinum gold spread, exploiting the coffee seasonal, the footprint protocol, currency wars, trade winner with the Minnesota squeeze. What does it even mean? Well, you find out, and of course, each of the articles has great charts in it, really tries to walk you through as you learn something. Here's the trading patterns. I mean, this is a must for you. If you're a serious trader, you want to learn all this, and of course, the daily Market Focus. How do you get it? Because it is free through us. You can pay them $79.95, or you can call us. You can come through us at www.iraepstein.com. You'll see a carousel of free offers on our website. You can click up here if you're watching me on YouTube, or underneath me at any time here on some of the websites. It'll have a form that says click here. Just click that. The form will appear. Fill out everything you need. We'll put it in your hands. I'm Ira. You have a great day, and I will talk to you all tomorrow.